Good morning, legends. Hope you're having a great time on the charts with this crazy price action. Before I get into it, I just have to apologize. I decided to start this video a bit later today because I wanted to wait for the Asia session to actually open. As a result, I have animals in the background that are dying for their walk. So this may be a little bit more noisy than normal, but just bear with me. They are on the edge of their seat waiting to get outside. So as you can see, I'm starting with the order book today. We've got some pretty crazy orders going on either side of price. We're going to talk about that. We're going to talk about yesterday's price action and what I think is actually going on and why we didn't have too big of a move in the US last night. Also, just a massive shout out to the cabin crew in the TTC Discord. They ran their first Zoom session last night to help out the community, answer any questions, and help the community learn to understand this trading method. And it was an absolute hit. So thank you to you guys for doing that. I'm laughing because I'm sure you can hear my dog running up and down like crazy. I'm so sorry. I have to work out how to do this a bit better. Anyway, let's get into this. If you are new here, welcome. I do live in a zoo and that is the background noise. If you are returning, welcome back. You probably have been introduced to my cat on this channel at the very least, probably not my dog yet. Be sure to hit that like and subscribe, help to get this video around the internet. Turn that bell notification to all so you can get notified every time I upload a video, and don't forget to leave a comment below. Now, I'm going to come back to these heat maps, but I want to talk first of all about what I think is actually going on with the price action, because as we can see here, we have had some crazy swings all week. The market makers have decided to not give us midweek reversals, but instead give us midday reversals. On yesterday's stream, we introduced the BBWP down here to help us trade this volatility, which has been great. But as we start to get into a tighter range, trying to trade it gets more and more risky. Here's what I think is going on. We have some news events coming up end of week that we have to be very, very careful of. Tonight, Melbourne time, 9:45 p.m., we have the EU monetary policy statement coming out. If we have a look at Forex Factory, and let's go to the news page here, you can see that there's already news out about it. The European Central Bank is poised to signal July rate hike as inflation jumps to fresh record high. So it's already FUD out around this. That's not the only thing we have. Then tomorrow night, Melbourne tomorrow night, I should say, down here we have the core CPI, which will be 10:30 Melbourne time Friday. Now, you usually want to be out of your trades by this time anyway. End of UK session on Fridays is the best time to exit your trades for the week. So we may be unaffected by this, but we definitely need to keep an eye on the charts tonight for this EU monetary policy statement. Here's what I think is going on as a result of those two things, because they're both really quite big. I think this whole week has been about the market makers collecting contracts, and that's why we've had big swings either way and a lot of indecision, making it very, very hard for typical retail traders to get trades. Of course, for us, trading this market maker method with the moon cycles, it was perfect. We were able to get a short here. We got the moon cycle notification here. We were able to get a long trade here. And using the BBWP, we were able to take our profits when the BBWP was signaling local tops and local bottoms. So it's been great so far. However, I'm not sure it's going to be so easy for the rest of today and into the rest of the week. Now, we know the typical business model is to run a 3-day trend, give us a midweek reversal, run a 3-day trend, trap on Friday, sideways consolidation on the weekend. That's the very, very basic version of the entire market maker's business model. However, that hasn't happened this week. And the other thing you need to know about it is that the market makers are never going to keep price action exactly the same all the time because they don't want us to catch on. If we catch on, more of us will win. So this would be one of those weeks where they are switching things up to trap us. As an example, let's take a look at the high block liquidation levels. And you can see here, look at this flip-flop all week from more people being long to more people being short, back to long again, back to short. The leverage on the table right now to the shorts is at 1.79 billion. All of this white area here that you can see between price is where everybody is getting wiped out trying to guess price. And the closer we are charts of price, you can see the more white it is, meaning the 100x leverage traders and the 50x potentially even are absolutely getting wiped out right now. Taking a look at some of these big peaks out here where we've got open positions in their highest congregation that are at risk. We've got 29K is where people who are currently open long will, for the most part, get wrecked at the highest level. And for the shorts, we've got around 31, let's just say 32,000. So that becomes the range for the market maker right now where they can do the most damage still. See, a lot of those orders are there sitting at around that 29K level. And we do have a couple up here building just under 32,000 as well. Just in the time of filming this video, it's only been a few minutes, and down here you can see some of these orders are disappearing. We did have two levels that were sitting at 1.1k. Now that's reduced. We've got 1.1k at 29,750, but the 730 Bitcoin orders at 29,700 has been reduced from 1k as well. So what does all this mean on the actual chart? The first thing we should be asking ourselves is, in this entire range so far, who's actually trapped? Where has the market maker sent price and not returned to? Because that's going to give us an idea of who's mostly trapped. And we can see up here, I've got two levels marked. So we've got trapped traders marked up here, and there's also some trapped traders marked down here. Now we need to go to a lower time frame for me to show you exactly what is going on in that area. And now when we expand out that area where the traders got trapped, you can see up here that this one here was a market maker's candle. Because it's been shaded in blue, that was a high volume market maker's candle that broke out of this consolidation for the final trap before it gave us that M formation reversal. And so this was a strategic move by the market maker to induce people to go long before they reverse price. However, when we look towards the bottom, the market maker only turned up here on this volume stopping candle, but price continued down from there. Now at this point in time, traders who open the wrong position down here, yes, they would still currently be trapped because price hasn't returned there. However, which one was the more manipulated move? In my opinion, this one was. In that case, that means the market maker trapped people into going long here from the breakout of this consolidation, which means their goal was to send price down. Did they finish that goal here? We're not sure, but they did then come back, pick up some more. We had high volatility during the dead gap zone yesterday, and then they sent price down again. At the same time, what's making this price action confusing is that they're creating higher lows, at the same time creating lower highs. But all of this is just to trap you into a position. So here is what I would watch out for today. What we are clear on is where yesterday's low was set during the Asia session, and during the entire UK session and US session, we did not break that level. So that just makes a level for us to watch today. However, we have wicked into it once. If we break below this zone today and Asia wants to set a new low of the day, then it's likely we're going to come back to this section here. Yesterday, we had some large orders in this area at around 28,900. Let's see if they're still there. And yes, they are. They're not that large, but we do have some orders still waiting down here. And looking left, you can see that these orders have been here for quite some time, probably in preparation for bad news and hopeful of a buy the dip kind of moment. But in order for price to get all the way down here, it still has to break through all of these orders here. So when we mark those current buys and sells on the chart, these are the buy and sell zone that we're currently looking at. And you can see that the buy zone is just a little bit lower than yesterday's low of the day, and the sell zone is back at the dead gap zone high. So this might be the range that holds during Asia, although it's important to note that Asia actually has been running a trend this whole week. So down here it pushed down, here it pushed down, and here it actually pushed up. So we certainly have not been having a normal week where Asia's usually supposed to just consolidate. And we've actually been getting that consolidation during UK here, and UK here. Why that is, I can't tell you, but I would say it's the market makers keeping us guessing. So what may happen for the rest of today is we may get a calm before the storm moment, or maybe a calm after the storm, because we've had the storm all week. Now we know we've got this policy statement tonight, which will will actually come out towards the end of the UK session. So I would be waiting to trade the recovery of that, to be honest with you. I would not really try to trade today before anything comes out, because any moves before this statement comes out are just going to be designed to be trapped moves. So it might be better off just sitting on your hands until tonight, potentially trade the recovery of this into Friday, but then be out of your trades by Friday before this CPI announcement. And finally, earlier this week, this moon indication gave us a bearish signal. The next time we're going to get the next signal should be around the CPI announcement on Friday. But that signal is an up signal. So sometime there is where we should see a reversal, which is what makes me think that we are currently in drop level 1. This was drop level 2, and that there is one more coming. But it may not be a dramatic one. It may either just take us back into this zone or back into this zone here. Or worst case, where we know these lucky dip orders are waiting in trading light that sit at around 28,900. So be careful today, guys. It might be a hands-off trading day. Just watch and see what happens. I definitely think if you're not already in an open trade, the best bet will be to trade the recovery after the news rather than trying to trade before the news. If you are looking for somewhere to trade, OKX is my preferred exchange. There is a link in the description down below to get you 15% off trading fees and up to $500 worth of sign up bonuses. So be sure to grab that link, because it is one of the highest trading fee reductions out there, and those fees can really add up over time. OKX has spot trading, leverage trading, earn features, margin trading. They have a lot of stuff on there, everything you can need, coin margin futures, which is something we will be trading when the bull market returns. And don't forget, the Discord is open for June. The link is in the description below if you want to join us. The first class section is where we teach this entire method in full, so come join us there. We have a thriving, growing community of traders who are always in there helping each other out. It is the best way to learn. Have an amazing day, trade safe, and I will see you next week.